Hello again, Soulswell family. Greg Solis here with the update. First of all, on the family front, if you will not believe this, Monica and I are now officially married 32 years. As I record this, we are actually celebrating our anniversary today. It's just hard to believe that much time has gone by, and boy, what an incredible journey it's been. It's been extraordinary in that we just recently, all the kids are out, and now it's just her and I, and we're celebrating 32 years. So a lot of cool things going on there. So that's what's going on in our family. I'm going to take her out to a nice dinner and treat her real well tonight, because anyone that could put up with me for 32 years deserves it. So that's what's going on. I hope you and your family are doing well also. Well, market-wise, it's been interesting right now. There's some volatility. Again, the things that we've been talking about for a while is that expect some volatility. As you hear me say a lot, if we could predict wars, politics, pandemics, weather, our life would certainly be a lot easier. Obviously, those are some outliers that you just can't predict. But right now, there's a lot of uncertainty on what's going on in the Middle East. Tensions are building. We're seeing oil prices go up. We've got some issues going on with some strikes and things like that. So there's potential supply chain issues again. That could be potentially inflationary again. And so there's some concerns here that, okay, might we see inflation begin to rear its ugly head again? And so there's a very delicate balance right here, because the labor market, although not cratering, the labor market has certainly softened, as I've been saying all along. We don't see us slipping into a recession, but we're definitely seeing some labor markets softening quite a bit. So the Fed's got to be real careful here. They reduced the Fed funds rate 50 basis points. They're anticipating that in November, they'll probably reduce them another 25 basis points, but they got to be careful that we don't reduce them too quickly, particularly if we have inflationary pressures. So this is creating a very delicate balance right now with what's going on in the Middle East. Again, we got an election coming up, so there's a lot of volatility. The market is kind of trying to figure all this out. But overall, we've held up very well. I mean, even though we're off to a choppy start in October, overall, we're still trading pretty close to our all-time highs on the S&P 500. NASDAQ is still off almost right around 4%. But overall, the markets have held up pretty good through this. The bond market's holding up nicely. We got the 10-year Treasury, right at about 3.8%. That's pretty good. And so overall, things still look pretty good. But it'll be nice to get some of this stuff behind us so that we can look at just the economics and the GDP numbers and corporate earnings and all the things that really matter. And remember that those are usually the drivers of what really moves the markets. More than some of this other noise, we really want to keep an eye on earnings in corporate America, which I think looks very healthy. So overall, we're feeling pretty cautiously optimistic, but again, volatility will be there. That's it for now. Hopefully, we're going to see you all at the client appreciation event. It's going to be a doozy. I hope you're there. My very best to you and your family. Take care and God bless.